What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as always. Uh, Today, I'm going to talk about the Johnson 2 listed on Mogul for sale. It's a short term rental, 5 bedroom, 3 baths, 2,400 square feet in Austin, Texas. I already did an initial video on this one when they did their pre launch a few days ago. I'd encourage you to take a look at that to give you some general ideas. And then also, I'm not going to go into all the steps that I always do in as far as like looking at the market and everything, because I did a video of the Johnson 1, which is a very, also in Austin, also a short-term rental. So I'm not going to rehash the market stuff. Um, I'm trying to not, I already did a 30-minute video on this one. I'm going to try to keep this one a little bit shorter today. I'm trying not to, waste too much of your time if you're watching all my videos, just sort of rehashing the same things. Although I do want to remind you, you want to look at the market, you want to look at the flood map, you want to look at the crime map. I'm not going to dig into those today. Today, my main goal is to answer the outstanding questions about valuation. Are we paying a price that I think we should or not? And then also about the trailing financials, where they said they have over a year of financials, but where the current owner hasn't owned it for a year. I was confused about that, so I asked a question about that as well. Um, I do want to mention, so I'll put a link to both of those videos I just mentioned in the description of this video. The first one that I did on this property, and also the video I did on the Johnson 1. As always, there'll be a link to our Discord, so if you want to jump in and talk to other investors who are investing on Mogul or Lofty or Collab or Ground Floor, we've got people in there every day just chatting about fractional real estate investing, and you're welcome to join us. And then also in that description, there's a link to all the places where I currently invest. As always, do your own due diligence on those platforms and on the properties on those platforms. You don't want to buy them just because I do. I'm just trying to share my real estate experience and thought process. I am a licensed real estate agent, but I'm not your real estate agent. I want to say that today, especially because I am going to be pulling up my MLS data in the Austin market. So, but let's jump into this property. Okay. Oh, and also, one of the things they did the pre-launch, and I mentioned, they're trying to raise over $1 million on this one. They've raised 159,000 so far. That's the one that sold out real quick. That was like the whole raise, right? So I'm still really not too worried about this selling out too quickly. I have a longer discussion about that and how we can maybe benefit from that a little bit if you do decide to invest in it in the last video, but I'm not going to rehash that here. But I think, like I said, I think we have some time. I mean, unless there's just some whales jumping into this one real quick, I think we have some time. And I think that the closing date is a few months off as well. So, take your time, really do due diligence and figure out, is this one that you want to get into or not? Um, I think the Johnson is still available to get into, as well as the Celeste. So, this is for a little bit like one would come up and it'd be the only one, and then it'd sell out. And so it's nice to have some options on the site. I think on average, like I've said many times, Mogul is putting out much better properties than what you see on other platforms. But I still think you should, do your own due diligence as far as like, pick. Do I want to pick the best ones? Do I just want to trust them and buy a little bit of everyone? Um, I don't necessarily recommend trusting anybody because I never do. But so let's look at this one, okay? So the outstanding question for one, valuation, right? I really was wondering about that. Um, the When I pulled up some comps in the last video of the way I would run comps, because I have the MLS there, and I say valuation, but as an agent, I'm not giving you a value, right? What we talk about is sale prices, like what we'd expect it to sell for. I know that's a silly nuance, but value is a appraiser term. It's not an agent term. So even though people throw around ARV or after repair value or what's the valuation of this, really all I'm ever telling you about is if I were going to sell this, what I'd list it for, what I'd expect it to sell for. That is not an actual indication of the value of the property. I know that's a weird thing, but agent rules. I just want to throw that in, especially because I'm pulling up the MLS today. So one of the things, the comps that I pulled up made it seem like we're overpaying considerably. The purchase price on this is 2.2 million. It was sold less than a year ago for I think 1.8. Let's see. I have it up. No, actually 1.7625. less than a year ago. Very little work. It appears, it looks like they did some accent walls and whatnot, but it seems like it looks very similar. So that worried me right off the bat. But then I took a look at some additional comps, and I still didn't get there. And so now I want to look at the comps that they provided, right? These three properties, and see, how they do, what they look like. And so when I did that, you can remember our property is 5 bedrooms, 3 bathrooms, 2,430 square feet. You can already see two of the three comps are significantly larger than ours. And so if we, applied a per square foot price, we'd be worried. But let's tackle these one by one. Okay, 1001 Land Creek. So, or Land Creek Cove. I believe this is the property that they're talking about. One thing to note, this was listed at 2.5, but it actually sold for 2.35, right? And when we look at how they're looking at it, they put it in here as 2.5. So I'm hoping this was just lazy data entry, and that in November 24, maybe I just want to double check that so that I know that we're talking about, yeah, November 24, that we're talking about the same property. So that already is problematic. This property is significantly larger than ours. The lot is huge. It's a 1.1 acre lot versus, what do we have here? Versus less than a quarter acre lot for our subject property. Um, one of the few comparisons, this property didn't have a pool. But I have a very hard time using this as a comp, right? You have 4 times as much land, you have significantly more square footage. This is not one that I would put a lot of weight on if I were trying to, and you have no interior pick. So my guess is this one might have been in rougher shape, but there's just, I don't know. This is not, if I were going to try to pick comps that were going to inform me on what I should pay, what I should use to buy a property, this is just not one. So this was a little bit disappointing to be the first one. This next one, again, I think they have bad data on their sales price, because if you look in here, let's see, the Gillespie, they have 2.1 million. But I've got it actually selling for 1.95. It was listed at 2.15, so I think that might be where that confusion is coming from. But again, much larger property, 2024 build, so brand new construction. Um, and then, it's a very different property. It does have a pool. This one has a little bit smaller lot, so I mean that's something that, it's one of the first times I can say, that the subject property has something going for it, that we don't have. And I think that mid-century modern look that the Johnson 2 has, could be very appealing to some as a short-term rental, maybe more so than this particular property. But I don't think that it's necessarily enough to make me want to, pay this a similar price. And actually, like we just said, right, like that we're paying $250,000 more than this sold price, which is, this home is larger, newer. So again, I don't think this is a great comp. This is not one that I'd use if I were gonna, work with a client and try to figure out what we were gonna pay for a property. I would. This is, I'm really struggling, and this is, Travis Heights, which is a different subdivision as well, right? So I'm really struggling to see like why these are the comps that they used. And this last one wasn't even in there at first. It was just the first two when I first looked at them. So it looks like maybe this is maybe an effort on the part of their agent to give them something to bolster their numbers after the fact, which is never how I'd want to go about doing this. This one is one of the most similar size. It is still 300 square foot larger. It's a 2016, and it did sell for 2.35. So this is, one of the better comparisons, I think, or one of the few that gets me to think, okay, maybe we're not grossly overpaying. But okay, let's look at, so what is that per square foot? Um, Usually, let's see. because I have the client-friendly version that I'm just so not used to looking at this version. I do that because so I don't show you anything I'm not supposed to when I'm doing this online. But so let's just do math. Let's just do math. Okay. Math is fun, right? So we have 2350000 divided by 2755. Okay, so 853, let's say, and then we're going to multiply that. Oh, just keep it up. 2430. Oh, times 2430. Okay, I mean that gets us close, right? We're at least above 2 million. It's so this is one, that at least arguably gets us into the ballpark of the right price. It is a 2016 build, right? I mean, it is, if you look at this property, if you think about the desirability of this property to a typical buyer, this one strikes me as, I would want to pay more for it. Okay, we're getting the Johnson 2 fully furnished. And then let's look at where these actually are on the map, right? Let's dig into that because I want to. Oh, well, and that doesn't help us because I'm actually going to pull them both up, um, and just look because this is. I wonder why this wasn't included in their original one, but my guess is we're going to be pretty far away. I'm not sure because it didn't come up in my comp search, so I want to just see where we're at here. Corrections. Okay, not from my location. Now you guys know where I live. If anybody wants to come visit, you are welcome. Okay, 2.4 miles away. I mean, this isn't terrible, but I mean, I'm never pulling comps from so far away. When I have all, the ones that I showed in the last video, they're all from right in this area. So the fact that I have to go way over here and get a larger property that is, you know, less than 10 years old compared to what is ours, 1956 build. Um, I don't know why we're doing this. This is not how I'd go about coming up with a value. And so I did. I reached out to them and I was like, "Hey, why? Can you give me a little bit more understanding of why we're using the comps we're using?" And this was one of the times I was kind of disappointed in their response. Is they just said, we have an appraisal contingency. If it comes in low, we can always renegotiate. Um, and like that's true, and I think that that's a prudent thing to do. I'm always going to have an appraisal contingency when I make offers, especially if you have financing. But at the same time, I worked in appraisal for a while, a very long time ago. But one thing that I know is that from getting appraisals on properties that in my day job that we're helping clients buy is appraisers are really good at just hitting the number that you're asking for, right? If they see your contract, they know what you're paying, and that typically weighs on them a little bit as far as when it comes to as much as they won't admit it, they want to say appraisal is more of a science, but it very often acts as an anchor for the price that they're going to spit out. And so um I'm never going to use that as my main determinant of what I'm going to pay for something, right? And so it makes me very worried about the growth part of this equation because like okay, let's say they get it under contract and it appraises for that price and we pay that price. Um it's still 5, 5, 7, 10 years from now when we go to sell it, we're going to compare it to what the comps are out there, and maybe it starts to act, to pull up it's the new high comp and then pulls up values. But I'd be very worried about predicting growth from a point that we're already at. Like even though yes, I think the appraisal contingency protects you to a certain degree, I don't want it to be the only thing that I'm using to figure out am I overpaying for this property is all that I'm saying, right? Like I'm always doing my own analysis of what is this property, what do I think it should sell for before I'm making an offer, and before and I think they probably did, but I don't know. And like I said, I mean, it looks like they have bad data on sales prices, at least that's plugged into some of these. Yeah, and this one actually says 2.5 is what they had in there. And I think even that one's wrong, right? Or is that right? Yeah, it's 2.35. So, I don't know if they're just being given bad data by their agent or if they're, I'm not really sure, if this was just bad, um, you know, uh, data entry problem. But it does worry me, right? This is one of the times where, um, I don't feel good about that valuation, and because of, or I don't feel good about that purchase price. You see, I still always say valuation, but it is, what I'm doing as an agent is helping people figure out what purchase price or what offer price, right? I'm not actually valuing this property, but I think that it feels like we're paying more than we should be. Um, and so then let's see. As me looking at it, when I'm just looking at it as an investor, I feel way more comfortable saying that. But just because I do, I am pulling up the MLS. I do have access in that market. I'm licensed in Texas. Makes me a little bit more worried when I talk about these things that I'm saying everything perfectly more correctly than maybe I always, typically do. But in any case, so we've got a refinance here where they're saying, okay, we're doing a cash out refinance 5 years in. Well, if we're paying more than we should today, I'm worried about taking that money out in the future. So okay, let me shut that off. But then how much does it really affect it? Hey, we still have a 13.2 IRR. Um, but Oh, and so I don't know. To me, remember my rule number one is don't lose money, right? And I think one of the ways that we make sure we don't lose money is by not overpaying. So for me, this one's going to be really tough to want to buy. You know, just from a pure, do I think we're offering too much for it? And then uh, again, just because I decide not to buy it doesn't mean that you shouldn't. But this is one of a few. Most of theirs I've been happy to at least put a little bit of money to work in, and for all of these sites, I am very much still experimenting. Um, I've only been on this platform. I think I've owned properties now for 4 months on here, maybe five. So it's going to be a long time before I just completely trust everything they do and buy a little bit of every one. And I might never get to that point. I'll probably always want to do some due diligence. But yeah, this one is, I think, a rare miss on their part from my perspective. Now, it is one I'll keep a look at because if it does appraise low and they do renegotiate and it hasn't, and they're still raising cash for it, I might jump in at that point, right? Um, but the other thing I was talking about last time, and is the cash on cash yield, right? They're saying this is a no growth number, meaning that if they just look at the historic numbers, this is that it should yield 9.4% going forward if they can match what it's been doing in the past. And if you watched my earlier video, I questioned that. Well, how could we have that? Because we know, they've only owned this, or the current owner has only owned the property since the middle of last year. Well, I asked that question. I got a good answer for this one, is that the owner prior to the last owner also used it as a short-term rental. And so they have two, they're putting together the two different sets of numbers. And it was a short period of time, the other one, but that also explains why when I tried to pull it up on AirDNA, it only had the shorter history, I believe, because I think it wouldn't pick up the older listing, right? And AirDNA is not always perfect as far as when it's pulling comps anyway, but I think that that's what went on there and why we couldn't verify that. So far, these guys really haven't given me any reason to not trust them when they tell me something like that. Like, the ones that I've bought that have been operating with existing financials so far have been paying out what I've expected them to. So, I think that's a perfectly good, you know, explanation. But again, you just because I trust that doesn't mean that you should, right? Like if you want to dig into that a little bit more, they are always really open to answering questions for me. Um, and most of the time have like answers that I'm very happy with. The valuation one here bothered me a little bit, but I'm never going to see eye to eye on every platform. I think it's very rare that I'm actually critical of them, right? They're for the most part, you can probably tell they are my favorite platform as far as just like from a pure real estate perspective, putting out good deals. I think they've got pretty much everybody beat at the moment. Now, I think I probably make more money on Lofty, but that's because it's such a it's not a broken market, but it's a um, the secondary trading aspect on there makes it so you can just like swoop in and get really good deals on some stuff if you're willing to be like that exit liquidity for people who are unhappy with their deal. But at the moment, if I'm just buying something for the long term, I've found, a long term hold, more traditional, excuse me, real estate strategy. I found way more on Mogul that I'm happy with than anywhere else at the moment, right? So just because, I really don't love the answers on this. I'm super curious if it has to do with the agent they're using there, or if there's something else going on. Um, if they just because it is an off market deal, if they just found the deal, the numbers look really good as far as from an income perspective, and this is what the seller wants, and so they're trying to make it work. I mean, that's it's tough to know what's going on that side of things. That would be something. They give us a little bit of write up about how what's going on, but I wouldn't mind them giving me 3 pages of info about like, hey, how the deal come about. What have they did mention like they're 2% below what the person originally was asking. Um, you know, I don't know that that really means anything to me, right? Because somebody can ask whatever they want to. Um, but they also are getting all the furnishings, and they're estimating the value of 110K. I'm sure to furnish this home in the way that it is, somebody probably spent that much, and that's what you'd have to do if you bought a vacant home. At the same time, when I've helped clients buy short term rentals, we're hardly ever giving someone full credit for the money they spent on the furniture. Because if they don't sell it to someone like us, then their next option is to sell it basically at a yard sale or a consignment shop, and so they're getting less. But again, I don't think that it's terrible. Like it's making it so we can get money day one. The other thing too is they said they have $300,000 worth of bookings already, which is the majority of the year booked. Um, that's definitely, or is that what they said? No, it's projected to earn 300,000, but they have, what did they say? With the majority of the year already booked. So that's not 300,000 booked, projected for 300,000, majority of the year already booked. And so, that makes it a lot different than if I'm just trying to buy a house and furnish it myself. So I think there's value there. Um, you know, to me, it's not, I'm going to spend, $4.5 million more than I think the home should sell for, which is, I think it's somewhere in that ballpark, right? I mean, I'm not quibbling over like 100,000 or 200,000 on this $2.2 million home. I think the price that this home last sold for is probably very close to what it should sell for today. Because if you look at the Austin market, there hasn't been any appreciation, and some homes have actually gone down in value, right? So I think, okay, maybe they did a little bit of work, but I think 1.8, maybe if I were going to list this for somebody today, might be what I would do. I have a really hard time with the 2.2. Um, hopefully the appraiser sees it the same way I do. They come back and say, no, 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 that's way too much. And it does give them the opportunity to bring that price down. Because, my real fear, obviously, if they can carry the debt because they have good income, I have no problem on that. Like, I think the income side, like, it's a good cash on cash yield. Maybe what happens is you get stuck holding it forever. Um, but the thing is, maybe that just turns into your yield because you paid way too much and we get stuck in it for a very long time before you can sell out for any sort of profit. That's my concern. And again, rule number one, don't lose money. So where I have all these other great options from them, at the moment at least, I'm opting not to buy any of this one. Like I said, that could change in the future. I'd love to see the appraiser come back and be like, whoa, whoa, we gotta pay less. And who knows? Maybe he's looking at something that I'm not. Maybe there's some aspect of this that I'm missing. Um, where I've really just been happy with a lot of the things that they've done. Uh, it's surprising to me to disagree with them and so drastically on a deal. Uh, so it does make me wonder, like, there's certainly could be something I'm missing too, right? I did look for like other comps that were like similar homes to this to see if this architecture style, garnered a premium, and I just didn't see that. Um, I don't know. I think this is an instance where they're like, buying an income producing asset and they're valuing it one way, and I just, I'm looking at property the way that I look at property as far as from if this is just going to sell on the open market, what I'd expect to get for it. Um, which is not always going to yield the same results, and is why there's often these this arbitrage play where you can do one or the other. I'd much rather be on the other side though, right, where you're buying a home that the home itself, um, you're paying less and getting extra cash flow than paying up for the cash flow and being hurt on the asset value side. I think that's really all I'm going to say about that today. Um, I really, I keep going back to it's just such a good yield, and I like the Austin market, right? Like that's why I really don't want to say I'm not going to buy this right now, but it's just the value. I really am having a hard time with that value and thinking that I want to pay that, just based on the comps that I'm looking at. But anyway, until next time, I'm going to keep making mistakes so that you don't have to.